Is it even possible? Retiring in less than 10 years probably sounds a bit insane, right? But what if I told you that it was possible? Maybe you're even doubting yourself given your present financial situation. It's probably seemed like some far-fetched dream. But here's the deal. This video came on your suggested feed for a reason, and I'm here to open your eyes to that possibility. I'm going to lay out the exact step-by-step blueprint that real people are using to make this your reality. Forget waiting until you're 65. We're talking about achieving financial independence and having the freedom to live life on your own terms way sooner than you ever thought possible. This isn't about some get-rich-quick scheme. It's about smart strategies, discipline, and a clear plan. Now, before you think this is just for trust fund kids or lottery winners, let me stop you right there. This blueprint is designed for everyday people. People like you and me who are willing to put in the work, make some calculated changes, and stay focused on the prize. We're going to break down everything from figuring out your magic number. That's the amount you actually need to retire, to slashing your expenses, boosting your income, and investing like a pro. It's going to require a shift in mindset, absolutely. But the payoff? Total financial freedom in a decade or less. Stick with me through this video, because I'm not just going to skim the surface. We're diving deep into each crucial step. I'll give you the formulas, the actionable tips, and the real talk you need. By the end of this, you'll have a clear roadmap. No more guessing, no more wishing. Just a concrete plan to potentially change your life. So, if you're serious about fast-tracking your retirement, grab a coffee, maybe a notepad, and let's get into it. This could be the most important financial video you watch this year. First things first, we need to figure out your financial independence number, or FI number. This is the cornerstone of your entire early retirement plan. Without this number, you're essentially flying blind, hoping you'll magically have enough money someday. Think of it as the total amount of money you need to have invested so that you can live off the returns indefinitely, without ever having to work another day if you don't want to. So how do we calculate this magic number? We use something called the 4% rule. This is a guideline widely used in the financial independence community, which suggests that you can withdraw 4% of your investment portfolio each year in retirement without running out of money. The formula itself is surprisingly simple. Take your desired annual expenses in retirement and divide that by 0.04. So, it's annual expenses divided by 0.04 equals your retirement savings goal. Let's run a quick example. If you figure out that you can live comfortably on, say, $40,000 per year once you're retired, that means all your bills, food, travel, hobbies, everything. Then you would take $40,000 and divide it by 0.04. Punch that into a calculator and you get $1 million. That's your FI number, $1 million. Now, I know what you're thinking. $1 million? But Money Mastery, that's a ton of money. And yes, it is. But remember, we're talking about retiring in less than 10 years. This isn't a casual stroll, it's a focused sprint. And knowing this target, $1 million in this example is the first critical step. It tells you exactly what you're working towards. If your annual expenses are lower, say $30,000, then your FI number becomes $750,000. If they're higher, say $60,000, then you're looking at $1,500,000. It's all relative to your desired lifestyle. The most crucial part of this step, even before the division, is accurately calculating those annual expenses. Okay, so you've got your FI number. Step 1 completed. For many, it's a big, slightly terrifying number. The next logical question is, how on earth do I save that much, especially in under 10 years? The answer lies in a two-pronged attack, drastically cutting your expenses and massively increasing your savings rate. Every dollar you don't spend is a dollar you can save and invest. It's a double win, and it's incredibly powerful. Let's talk about the big one first, housing. For most people, this is their largest monthly expense. Downsizing your home can free up a significant amount of capital and reduce ongoing costs. If you're renting, could you move to a smaller place or a less expensive neighborhood, or even consider house hacking by renting out a room? These aren't always easy decisions, but the impact on your savings potential can be absolutely massive. Think about it. Shaving off $500 or $1,000 a month from your housing costs goes straight to your investment accounts. Next up is debt. High-interest debt, like credit card balances or personal loans, is an absolute killer for wealth accumulation. It's like trying to fill a bucket with a hole in it. You need to aggressively tackle this. Prioritize paying off anything with an interest rate higher than what you could reliably earn in the market. Strategies like the debt snowball or debt avalanche can be really effective here. Becoming debt-free, especially from consumer debt, frees up a huge chunk of your income that can then be redirected towards your early retirement goal. It's a non-negotiable step. Then we get into adopting more frugal habits. This doesn't mean living a miserable life of deprivation. It means being mindful and intentional with your spending. Things like cooking more meals at home instead of eating out, canceling unused subscriptions, finding free or cheaper hobbies, buying used instead of new when appropriate. These small changes add up significantly over time. Slashing expenses is critical, but there's a limit to how much you can cut. You still need to eat and have a roof over your head. That's where increasing your income comes in. Combine expense cutting with boosting earnings to skyrocket your savings rate. This is where you pour fuel on the fire. Side hustles are a popular way to boost earnings. Think about skills you already have or could develop. Are you good at writing, graphic design, web development, or tutoring? Freelancing platforms are full of opportunities, or consider hands-on work like delivering food or ride-sharing. Even a few $100 extra a month can make a huge difference. Explore passive income streams. Most passive income requires upfront work or capital. Build assets that generate income with minimal ongoing effort. This could be rental real estate, dividend-paying stocks, or digital products. These can earn you money while you sleep. Don't neglect your primary career. Optimize your main income source. Look for advancement or promotion opportunities. Can you negotiate a raise? Sometimes moving to a new company can boost your income. Don't be afraid to ask for what you're worth. A significant raise can be a game changer. Invest in yourself to increase your income potential. This could mean higher education or professional certifications. Think about skills that are highly valued in the marketplace. Chapter 4. Investing for liftoff, fast-tracking your growth. So, you're slashing expenses like a ninja and boosting your income like a boss. You've got this growing pile of cash every month. Now what do you do with it? Letting it sit in a savings account earning next to nothing isn't going to get you to early retirement. You need to invest it and invest it strategically for growth. This is where your money starts working for you, and the magic of compounding can really take off. For most people aiming for early retirement, the stock market is a cornerstone of their investment strategy. Specifically, low-cost index funds and ETFs are incredibly popular. Think funds that track the S&P 500 or the total stock market. These give you instant diversification across hundreds or even thousands of companies, reducing your risk. Plus, their low expense ratios mean more of your returns stay in your pocket. Historically, the stock market has provided solid long-term growth. Real estate is another major player in the early retirement game. This could be through direct ownership of rental properties, which can provide monthly cash flow and long-term appreciation. Or you could invest in real estate investment trusts or REITs, which are companies that own and operate income-producing real estate. REITs often pay out high dividends and can be bought and sold just like stocks. Don't forget about tax-advantaged accounts. These are your best friends when it comes to supercharging your investments. We're talking about accounts like a 401k or 403b if your employer offers one, especially if there's a match. That's free money, and individual retirement accounts or IRAs, both traditional and Roth. Contributions to these accounts can either reduce your taxable income now, traditional, or allow for tax-free growth and withdrawals in retirement Roth. Maxing these out should be a high priority. Then there are alternative investments. These can be a bit more speculative but might offer higher growth potential, albeit with higher risk. Things like cryptocurrencies have seen explosive growth and volatility, and peer-to-peer lending platforms allow you to lend money directly to individuals or businesses for a return. Tax hacks and smart withdrawals keeping more of your money. Alright, you're building this amazing investment portfolio and it's growing nicely. But there's a silent partner in all your financial dealings, the taxman. If you're not smart about taxes, both during your accumulation phase and when you eventually start withdrawing money in retirement, you could end up giving away a significant chunk of your hard-earned wealth. So, optimizing for taxes is a crucial, often overlooked step in fast-tracking your early retirement and making your money last. One powerful strategy during your earning years, especially if you expect to be in a similar or higher tax bracket in retirement, which can happen with early retirees who have substantial investment income, is utilizing Roth accounts. We mentioned Roth IRAs and Roth 401 KKs. You pay taxes on the money before it goes in, but then all the growth and qualified withdrawals in retirement are completely tax-free. Imagine decades of compound growth and then pulling it out without owing a dime to Uncle Sam. That's huge. Some people even do Roth conversions, moving money from traditional pre-tax accounts to Roth accounts, paying the tax now to secure that tax-free future. Another tactic, particularly in taxable brokerage accounts, is tax loss harvesting. This involves selling investments that have lost value to realize a capital loss. The test drive, reality check, and fine-tuning your plan. You've done the math, you're slashing expenses, boosting income, investing wisely, and thinking about taxes. Your early retirement plan is looking solid on paper, but before you hand in your resignation letter and sail off into the sunset, there's one more absolutely crucial phase: testing your plan and making necessary adjustments. This is like taking your dream car for an extended test drive before you actually buy it. It's about ensuring your plan works in the real world, not just in a spreadsheet. The best way to do this is to try living on your projected retirement budget for a significant period before you actually retire. I recommend at least 6 to 12 months. This means tracking your spending meticulously and ensuring you can comfortably cover all your anticipated expenses with the income you expect to have in retirement, which, according to the 4% rule, would be 4% of your target nest egg divided by 12 for a monthly figure. This test drive is invaluable. This trial period will do a couple of things. First, it will confirm if your budget is realistic. You might find you underestimated certain costs or overestimated your ability to cut back in other areas. Your 10-year freedom. It starts now. So, there you have it. A comprehensive blueprint on how to potentially retire in less than 10 years. We've covered calculating your crucial financial independence number using the 4% rule, the immense power of slashing your expenses and aiming for a savings rate of 50% or more, strategies to significantly increase your income through side hustles and career growth, how to invest strategically for rapid wealth accumulation, optimizing for taxes, and finally, the importance of test driving your plan. It's a lot, I know, but breaking it down step by step makes it manageable. The truth is, achieving financial independence and retiring early isn't some far-fetched dream reserved for a select few. By cutting expenses, increasing income, and investing aggressively, you can achieve financial independence faster than you think. It requires dedication, discipline, and a willingness to go against the grain of traditional financial advice that often assumes a 40-plus year career. But the reward, the freedom to live life entirely on your own terms, years or even decades earlier than most, is absolutely worth the effort. Start today, stay disciplined, and you could genuinely retire in less than 10 years. If you're serious about making this happen and want more tools and support, I've got a few things for you. Want more? You can download our free early retirement calculator to help you crunch your own numbers and see what's possible. Join our financial independence community to connect with like-minded individuals who are on this journey, share tips, and get motivated. And of course, if you found this video helpful, smash that like button and subscribe for more wealth-building tips and strategies to help you reach your financial goals faster. Thanks for watching, and let's get you on the path to early retirement.